All right. Good morning, everyone. Welcome to the Foreign Correspondents Club of Japan here in Tokyo. Whether you're here in person or virtually via Zoom, I'm Anthony Rowley. I'm a former president of the club, and I'll be acting as moderator today. This is the latest of what we call our deep dive events, in which we aim to take a look at current events, even if which are of interest, even if they're not making headlines at the moment. And today we're going to be looking at Tokyo's future as a financial center, and also looking too at some of the competition it faces from actual or potential rivals. And as usual, we have a panel of experts to make presentations, and I will introduce them in the order that they're going to be speaking. So first, on my right-hand side here is Naomi Takegoshi-san, who is Relationship Manager for Fincity Tokyo. That's the short name for it, which, as you probably know, it's an alliance among Japan's central government, the Tokyo metropolitan government, and 40 or 50 leading financial institutions and other organizations. And Fincity is charged with the task of leading Tokyo's bid for fame as a financial center. And then after Naomi-san has spoken, we'll move to Hong Kong, where we have Mr. Lee Hock. Lee Hock is publisher and founder of Asia Asset Management magazine based in Hong Kong, which is one of Asia's leading pension and fund management journals. He will help us to see Tokyo's latest initiative in the rather wider context of competition, as I said, among Asian financial centers, by no means least those in China, to become centers of excellence in Asian finance. And then we'll turn to Jesper Koll on my left here, who is a very well-known figure in Tokyo financial circles and indeed in this club. And he's a veteran analyst of the Japanese financial scene. He's currently senior advisor to the fund management group WisdomTree, and he was formerly chief strategist and head of research for US investment banks JP Morgan and Merrill Lynch. So having said that, we'll get started. And so Naomi-san, if you could give us your presentation. Thank you.
Thank you very much, Anthony, for your kind introduction. This is Naomi Takegoshi from Fincity Tokyo. Before I start, I've got a video clip which I'd like to play. Let me see if I can play it. Just sorry. Yeah. Bear with me for a minute, please.
Tokyo, the new financial hub for Asia and the world. A city renowned globally for its quality of life, its infrastructure and connectivity, and its safety. A world-class financial center, Tokyo offers the stability businesses need. An environment where international businesses can thrive. A financial ecosystem with abundant investment opportunities. And ample prospects for fintech innovators from all over the world.
Tokyo is an excellent location for global firms, with a wide variety of business opportunities, deep capital and liquidity pools, and reliable infrastructure. These are some of the many reasons that make Tokyo so attractive. I can highly recommend locating your business here.
The digital transformation of Japan's financial industry has opened many opportunities for fintech firms. The Fintech Association of Japan will help connect foreign fintech firms with Japanese fintech firms and financial institutions.
As the head of digitalization at the Tokyo Metropolitan Government, my expertise is in tech. We are developing 5G to enhance public services and residents' lives. Fintech should play a strong part in this, and asset management is vital to grow the innovation ecosystem.
The COVID-19 pandemic crisis turned out to be a wake-up call for Japan to recognize
multiple challenges it faces. We have to accelerate the digital transformation. We also have to address the climate change. And we also have to restructure the supply chain. And all of these require a huge amount of investment by the Japanese corporate sector. And in the meantime, the Japanese households have accumulated 1,900 trillion yen of underutilized financial assets waiting to be invested to generate higher returns. I think this will provide big investment opportunities for the global investors.
In Tokyo, you can receive full support in English for growing your business, including help with administrative procedures, introductions to specialists and service providers, free temporary office space, and a range of subsidies. Assistance is available from these sources, including locally in Hong Kong.
Now's the right time to transform Tokyo into truly world-class financial center. So please come on board and join us on our journey.
Tokyo, the new financial hub for Asia and the world. Come join us.
The new financial hub.
Okay, so let me move on to my talk now.
I forgot to say in my introduction that Naomi-san formerly served on the staff of the British Embassy here in Tokyo, promoting the City of London to a Japanese audience. So she's now reversed roles and is promoting Tokyo to the outside world. Sorry,
yeah, thanks very much for mentioning that, actually, yes. I was going to come on to that, but yeah, right. Before I, kick off, as Anthony very kindly mentioned, a little bit of my background. Yes, I was working for the British Embassy for some time, doing exactly the opposite of what I'm doing now, namely promoting the City of London, UK financial services to Japan, and helping UK financial institutions break into the market, develop their business in Japan. And paradoxically, as I was doing that job, it made me more aware of now, where does Japan stand? And Japan probably deserved more outward promotion, which kind of made me leave my previous profession and look for opportunities to help in such endeavor. And there was Fincity Tokyo, which was just coming to existence in promoting Tokyo as a financial center. So there I am. Okay, so today, Fincity Tokyo, it's been almost now, no, it has been in existence now for 2 years. We've officially had our second birthday recently. So I'm going to reflect on the journey that Fincity Tokyo has made so far. And also for the benefit of the viewers who have never come across with Fincity Tokyo, a little bit of explanation, background of our organization. Yeah, okay, so just to recap Fincity Tokyo's genesis, why have we come into existence? The very background of this is the Tokyo Metropolitan Government's vision of global financial city Tokyo. Well, this was something that was tackled by previous Tokyo governors too, but the momentum and the preparation towards this goal has really started in earnest with the arrival of Governor Koike. And what she did first was gathered together a group of experts in this very topic of how to make Tokyo a global financial center. And she convened a high-level expert group, Kondankai, chaired by Mr. Atsushi Saito, the KKR chairman advisor at that time, and Jesper Koll, he was one of the panelists, I remember, for that discussion. And in this panel, they have discussed how to make Tokyo a global financial city. The underlying philosophy philosophy or the grounding rock of the discussion was, as it appeared in Nakaso-san's comments in the previous video, how do we effectively deploy the household financial assets, not just household financial assets, but assets which are generally just sitting around, to link it to the real economy development chain and bring that to sustainable economic growth. And what can Tokyo do in order to achieve such future? And so we discussed, we wanted to become a financial hub of Asia and attract financial professionals, capital, information, and technology. And in our efforts, financial services is very broad, but with a primary focus on asset management and fintech. And excuse me, and also it's not promoting finance for financial business's sake. It is to address social challenges that Japan faces. So with this vision, there are many measures that were to be taken, but one such step was the creation of Fincity Tokyo as an organization that promotes Tokyo as a global financial center and communicates to the outside world all these discussions and the steps that we're taking. So Fincity Tokyo was set up in April 2019 as a public-private promotional organization to progress this initiative of Tokyo as a global financial center. We are a membership organization. You can see here our members, which now is about 45. The Tokyo Metropolitan Government, it's the largest funder for this organization, but you will see that there is a mix of very diverse range of financial institutions straddling across the various industry verticals, domestic, foreign, large organizations, startups, etc. So we are membership organizations, but as a team, we are tiny. We've got just 6 people working for this, for Fincity Tokyo. It says headcount 5, but I am involved part-time, and there's another colleague who's helping. And Nakaso-san, who spoke in the video, he's the chairman, our figurehead, and it's run by Aritomo-san, Keiichi Aritomo, who some of you may have come across with before. Yeah, so that's who we are. And our mission is largely twofold. Firstly, it's this arrow here. This is more about working with the central government, local government, to have active dialogue with them, to make policy recommendations, to make Tokyo a more attractive location for financial services businesses to flourish. So making policy recommendations, that's one big pillar. And the second pillar, which is rather this side of this diagram, it's about sharing information, communicating to the outside world, promoting Tokyo's advantages to the global financial audiences. So these are the 2 large missions of Fincity Tokyo. So I'm going to talk briefly about these 2 broad missions. So on the policy recommendation side, I think this can be considered as a unique strength, uniqueness of Fincity Tokyo. We are a small team, but our senior management, they've been engaging with contacts in Nagatacho and Kasumigaseki, both to make improvements in some of the bottlenecks that are causing headaches to foreign businesses. We've done a list of 10 items which we've identified needed working on, and yeah, it's a lot, but actually we are making some tangible progress in some of these areas. So this is, it's a rather wordy slide, but it sums up where we are with these bottlenecks and our lobbying efforts. So on taxation, I think this has been considered as one of the impossible in Japan, but I'm pleased to say that we are making some changes. A performance-based compensation for directors in asset management business. This will become possible if subject to meeting certain conditions. And this will be introduced later in the year. And inheritance tax, which used to be really infamous, notorious here. There was a joke saying you can never die in Japan. But this has been now, although maybe not perfect, but it has been changed to the extent of making assets held outside of Japan exempt from this taxation. And regardless of how many years you have residency in Japan, and clarification that carried interest will not be part of the usual individual personal income tax bracket, but be taxed separately as capital gain at a lower tax rate. These, I think, are quite significant breakthroughs, and Fincity Tokyo, I think we can proudly say that we have been very much plugged into the policy recommendation lobbying activities to make these happen. And next, another significant improvement I think we're seeing is the simplification of the Japan entry process for foreign asset management firms, most symbolically, I suppose, by the creation of an English language counseling support team set up by the JFSA. And that team brings together officials from the local financial bureau, the officials from FSA to help with applications from foreign firms, which are now permitted to be handed in English. And the firms who have applied through this English language route, they will be supervised by English-speaking team too, which I think is quite a significant step in making lives easier for those coming to Tokyo. So these are just examples of where we've been able to make to contribute in making progress. So coming on to the second pillar of our activities, which is about overseas promotion and outward communication. So before COVID-19 days, of course, we were able to travel around the world to speak at large financial services fora to communicate all these endeavors by Tokyo and actually network with potential companies coming into this market. You will see a picture here from Nakaso-san speaking at the Paris Europlace conference. We also were part of the seminar with the City of London. City of London has the MOU with the Tokyo Metropolitan Government. So they run a seminar on an annual basis, and Fincity was also involved in this. And in the bottom here, you see our booth at the Asia Finance Forum in Hong Kong. It's these days just seem so many years ago now, as we've now moved into an era where we have Zoom meetings like this all the time. So naturally, Fincity Tokyo, we've also switched to delivering a lot of events online, including our flagship event in February, which we organized with Nikkei about the asset management industry and its latest in Japan. And also with Fincity Tokyo has been doing a series of networking events to help foreign companies with an interest in Japan to help them with some advice on how you go about setting up a business, also networking with players in Japan by an online event. And we also work extensively with foreign media. Most recently, we had an online webinar with Reuters, and this event actually had Governor Koike join as a panelist, and we had a very impressive viewer number for that event, I'm pleased to say. And we also had articles with foreign media. And we're also, of course, active in social media with Fincity Tokyo has a LinkedIn channel. Until a few months ago, our followers was a mere 400, but we've ramped up our efforts to get more traction. And we're now about 1,400. I know it's still low, but I think we're making steady progress. Yeah, so these are, yes, I've introduced the steps, the journey we have made so far, but you might wonder, yeah, we can see you've done a lot of things, but will Tokyo succeed this time? I'm sure that must be a question buzzing in people's mind. Yeah, it is true that it's not the first time that Tokyo is embarking on this journey. I've seen past attempts whilst I was working at the British Embassy. But I think this time I find a quite distinctive difference, probably because this global financial center vision, it is now being recognized by national government policy level as well. It's integral to Japan's long-time growth strategy. And there's a lot of interest in central government now to make this happen. I see a lot more joined upness now. I was also pleasantly surprised when we did this roadshow more than a year ago in London, and Fincity Tokyo were sitting together with a group of UK boutique fund management firms. And I invited our FSA colleagues if they wanted to come along and speak. And I thought maybe it's a event to engage with companies, so maybe they'll just leave it to Fincity Tokyo. But to our surprise, they came and actually gave some very good advice on market entry. So I definitely see a stronger One Japan approach to this, having the support from central government. And also in my earlier slides, I've showed a list of 10 items. So we have identified the challenges, and we're now, all we need to now do is work on these challenges and taking the actions that will take us to that direction. So like the Nike strap line, just do it, I suppose. We know the challenges. So we just have to steadily march on to make this happen. That's my take on the future.
Okay, thank you, Naomi-san. Right, we'll move to Lee Hock Tan in Hong Kong. Lee Hock, you're there, I hope.
Yes, I am here. Thank you.
Who's going to sort of look in from outside, as it were, and tell us. So Doza, please go ahead.
Thank you, Anthony, for having me here this morning. I will restrict my comments to asset management, as this is the topic that we are focused on, and not on the broader financial services sector. Perhaps I could start off by looking at a recent survey done by a UK consulting company, Z Yen in the UK. They did a study on global financial centers looking at asset management as well. And not surprising, New York is ranked #1, followed by London, Hong Kong, Singapore, Shanghai, Beijing, Shenzhen. And then further down, we have Luxembourg, Sydney, Zurich, San Francisco, Boston, and Tokyo comes in at number 14 in the ranking of leading asset management centers, in the world. So this is the study was done in the study was published in March last month. So this is the 29th report that they have done on asset management centers. So it would be interesting. They do this report twice a year So the next one is September. So it'll be interesting to see a few things in the next report. And that is one, whether or not London as an asset management hub, to what extent it will be affected by Brexit, for example. So that is still an ongoing issue. There's been talk about managers moving to the continent in a substantial way, in Amsterdam, moving to Frankfurt, to Paris. But from what I can tell from the anecdotal evidence, so far there's not been a massive departure. And obviously, given the amazing and progress of Tokyo, Fincity, we also want to see how the rankings of Tokyo will appear in the next survey and in the year after, in terms of how they will fare in the rankings. But I also want to take you through the assets managed in Hong Kong and Singapore. Maybe I could go through some numbers with you if that's okay. So in the case of Hong Kong, the last survey that was done by the SFC, Hong Kong had about 3.7 trillion of assets under management in Hong Kong at the end of 2019.
That is Hong Kong dollars, yes?
This is US dollars.
Yes.
3.7 trillion US dollars at the end of 2019. And that was a 20% year-on-year growth. So this is quite surprising because, 2019, you saw the issues that Hong Kong faced, right? And yet there was a 20% increase year-on-year. So this is for asset management and wealth management. In terms of AUM of asset management and fund advisory, it was US 2.57 trillion. And that was a 22% year-on-year increase. In terms of private banking, 1.1 trillion. In terms of the numbers, I can send these slides to you guys later after this. Okay, and total number of people in asset management, wealth management, 45,000, just over 45,000. Number of licensed asset managers in Hong Kong, 1,808. 64% of the AUM was sourced outside of Hong Kong. 64%. There was also a survey undertaken by the Hong Kong Investment Funds Association in collaboration with KPMG, looking at what are the challenges for the asset management industry in Hong Kong from now to 2025 and beyond 2025. So the top three challenges facing Hong Kong would be one, the regulatory change, two, fee pressure, and three.
Lee Hock, I apologize for interrupting you, but have you tried using your slides again now? Could you try again now? Maybe we can get them now.
Let me try again.
Sorry, but it makes it so much easier.
Yeah, you know what happened? My computer, there's a problem this morning, So never mind. Can I just continue, Anthony?
Yeah, continue, yes, sticky note.
I will send the slides to you later if they are interested to look at it. The third challenge facing Hong Kong, obviously, is the rise of the Greater Bay Area as a financial hub. This is the challenges up to 2025. Beyond 2025, the issue of aging population. That's another challenge. The second challenge facing Hong Kong is the use of artificial intelligence, AI. How will the asset management industry embrace AI? And the third challenge would be increasing connectivity for Hong Kong and the region. Now, moving to Singapore, let me just give some rough numbers for Singapore. The AUM in Singapore at the end of 2019 is in the order of 2.9 trillion US dollars. Case of Singapore, 2.9 trillion. Total AUM of alternative assets, in other words, those outside of the long only traditional, is 721 billion. The number of registered licensed companies in Singapore is 895. that is up by 108 from 2018. In the first 9 months of 2020, 86 new asset manager licenses were issued in Singapore, 86. And of the AUM in Singapore, 76% were sourced from outside of Singapore, 76%. Now, what is new in terms of the financial sector development in Singapore is the introduction of the VCC, the Variable Capital Company structure. And this is something that the Central Bank Monetary Authority launched in January of 2020. And this allows a lot more flexibility for managers to structure the funds in Singapore. And one aim is obviously to make Singapore a hub to domicile funds for the region. And since the launch of the VCC program, there's been more than 100 VCC funds that have been introduced. And also, I must mention something interesting that was announced by the central bank last month, Anthony. And that is to say that the MAS is now going to outsource $2 billion of mandates, US $2 billion of mandates, to external managers to manage green funds and sustainable investments. MAS has been outsourcing to external managers so that they can attract more fund managers to locate to Singapore. And this has been the agenda for the Singapore government in the last 25, 30 years. I remember back in the mid-1990s, the GIC outsourced about $25 billion to fund managers, global fund managers. So quite a few of the global managers then subsequently moved to Singapore to open their offices, obviously with minimum staffing requirements. You know, you must have 3 portfolio managers in the Singapore office. And that is something that that program, the outsourcing program, continues to this day, as I've just mentioned what MAS is doing in the case of Singapore. Now, for China, obviously, that is where the big prize, isn't it, is for global managers, right? Given the scale of the assets in China, the mutual fund industry today is around $2.7 trillion in China, which is the 5th largest in the world. And there are some estimates that by the year 2030, the Chinese fund market will be the largest in the world globally, given the size of the population and the rate of growth of savings. The one aspect I should mention in the case of China, Anthony, is the expected growth of the 3rd pillar. In other words, private investments, private pensions at the individual level. That, I think, is going to propel the growth of the domestic market in the next 5-10 years. In the case of China, the scale of the opportunity is why many global managers are setting up their regional headquarters in Shanghai. And I see that more managers who have been in Hong Kong for the last 25, 30 years are looking to put their senior staff in Shanghai going forward. And China, as you know, recently has allowed foreign institutions to own majority stakes in domestic asset managers and that started from April of last year, in joint ventures as well. And here, and this is why I think there's going to be a lot more activity across the border, not just in the Greater Bay Area, the 3 centers of Beijing, Shenzhen, and Shanghai, plus Hong Kong. Obviously, Hong Kong now is the premier offshore RMB center globally, and that will remain so for years to come, the way I look at it. I think I should stop here at this point, and maybe we could do some, discussion later. Anthony, maybe.
Sure.
Yeah.
Absolutely. And I should have explained that you've had technical difficulties with your slides, unfortunately.
Yes.
So, Jesper, we've covered quite a lot of ground there. Perhaps you could pull out a few of the most salient points as you see them from both presentations.
Well, I mean, first of all, thank you very much. I think we're off to a good start here, had a nice little overview. And there's tons of numbers and challenges and things that we can talk about, but let's just bring it down a little bit to the real level, which in my case is also the personal level. I've been stuck in Japan for about 30 years, and I think I've been on about 8 different panels to promote Tokyo as a financial center over the last 30 years. And so when, 3 or 4 years ago, Yuriko Koike, the governor of Tokyo, tapped me on the shoulder and said, "Hey, we're doing another panel," I sort of said, "My God, are you kidding me?" But she convinced me. And I do actually think that this time is different. And I know this time is different coming from a former stockbroker. It's a terrible, sort of promotion because, it's never different. It always comes around and goes around. Right. But what is different and why I do think that there's a genuine chance, that things are changing for the better and that Tokyo does have a shot to be more competitive as a global financial center. The first reason is actually the political will. And, it does go back to Governor Koike. She is dead set, very energetic about promoting Tokyo, not just as the best city in Japan. You're from Kobe, John, right? Sorry, not just as the best city in Japan, but green, smart, innovative, fun, and global. So I think, having a powerful person who can actually build the national consensus, and, she was successful in pulling first the Abe administration and second now the Suga administration into the idea that, yes, this is a good thing. And this is the second thing that has changed. So number one, we've got a strong political leader. Number two, there is actually the recognition that, wait a minute, finance is not just for greedy bankers. Finance is actually a growth strategy. And the Japanese economy is very much in need for a strategy that promotes jobs that are high paying, that are high impact, and that actually help allocate the vast savings pool of Japan into better and higher return investments. Just one number, and there's different studies on this, but basically one job you create in finance creates 3 new jobs somewhere else. You've got to hire lawyers, you've got to hire accountants, there's an ecosystem that comes around with it. So first difference, political leadership. Second difference, there is the recognition that finance is a growth strategy. And that's sort of the third difference that goes dovetail with that. Because during the 1990s, remember the first deregulation, the first drive of Japan to establish itself as a global financial center was the start of the bubble economy, right? It was in 1985, that the first foreign stockbrokers, 6 of them, were allowed onto the Tokyo Stock Exchange. And whether you like it or not, from a regulator's and from a politician's perspective, a lot of bad things happened during the bubble economy. So finance was sort of in a holding pattern, wasn't going to be promoted. That bubble legacy now has passed. This is not about Zytec. This is not about making the rich richer, but this is actually about promoting growth for the Japanese economy. So that, I think, is sort of something that has changed. The other point is that these transitions of financial centers, right, are actually very possible. Governor Koike has a great affinity to Monsieur Macron, the president of France. And as you know, France and Paris, overly regulated, very much behind even Amsterdam, never mind Frankfurt, Sorry, I'm German. That was a joke. In terms of, financial rules and regulations. But again, Macron has been a leading light in creating, a startup culture and a startup special economic zones, that actually has promoted, not just finance, but an overall startup and innovation culture in Paris very successfully. And then last but not least, we're seeing sort of a negative example where, the verdict on London post-Brexit, arguably is still out, but the initial results are terrifying in the sense that we had Amsterdam last year trading more securities than London did for the first time ever. In the years before, Amsterdam was number 8 in Europe. It is now number 1. So these transitions, these shifts can actually be very, very fast. And that's obviously a strong message that you've got to Hong Kong. And then last but not least, the competition for global financial centers, as was mentioned before, is actually increasing here in Asia, because quite frankly, if you and I have to consider where to put our Asian headquarters, Shanghai is now a very, very real option. And we should not underestimate how proactively, how constructively the deregulation framework in the People's Republic of China actually is progressing. Case in point, Goldman Sachs, just assumed 100% ownership of its, securities company in the People's Republic of China, which would have been impossible, right, just a couple of years ago. Now, so that's the good stuff. What's the bad stuff? What's lacking? And look, the agreement is let's promote asset management business. Now, John, as an asset management startup, what is the single most important number you need? There's one number, and it's not performance. It is assets under management, AUM, right? And in all these deliberations on Tokyo as a financial center, the idea of promoting emerging managers, of actually utilizing some of the pension pool, whether they're public or national, like Singapore does, to actually seed fund, to give AUM to emerging managers, that in Japan is just not progressing fast enough. And that's the single biggest hurdle, because if you and I want to establish an asset management company or want to establish ourselves in Asia, right, getting AUM from the local pensions managers, whether they're public or private, gives us a halo of approval, and that would actually allow us to grow business. And it's quite frankly, after having been involved now for about 4 years with this work, it's to me, I still do not understand why Japan cannot be more proactive, in actually promoting emerging managers here in Japan. So that's, I think my time is up. We can open it up for questions and discussion. Thank you.
Thank you for very interesting points, very forcefully put. Question for myself before I open the floor, and that is, obviously, what's emerged from these discussions is so far is the importance of asset management, among other offshore activities. But when foreign fund managers head to Japan, to Tokyo or to Shanghai or to wherever, what are they actually looking to do mainly? To manage the local funds or to attract funds which they can then move in outside and manage outside? Just let's ask you first to start with that.
Yeah, but look, I mean, as an asset management, I want AUM, right? So I'm the agent, right, who manages the money, who acts fiduciarily responsible, right? And I can sell you something that generates XYZ return, right? On a consistent and regular and transparent and predictable basis. So what I want is assets under management. Now the interesting thing is that yes, Japan is the world's largest creditor country. Yes, Japan has 1,900 trillion yen, of personal savings, but the domestic asset management isn't exactly strong, right? So it's very interesting, that it's kind of embarrassing actually when you look at the national pension management system, the GPIF, right, of their yen equity active managers, right? 80% are non-Japanese, which just tells you that fine, Tokyo wants to be global, wants to promote Tokyo as a global financial center. But the real issue is actually a domestic one, which is that the domestic asset management industry, for a whole myriad of reasons, right, is just not capable or able, of actually being globally competitive.
Okay. Naomi-san, I mean, one of the prime objectives of Fincity is to improve the domestic asset management capability. Do you think that the measures you've put forward so far on taxation relief, for instance, and others are really going to make a difference to the, actually, one of your colleagues in Fincity, the way he put it to me was that Japan originally was no good at soccer. So they bought a lot of foreign soccer stars in who trained the locals, and in no time at all, Japan produced a world-beating team. So how confident are you, or is Fincity, that it can bring about this transition so the asset management capability in Japan rises considerably?
Yeah, yes, there's certainly the AUM challenge, which Jesper was talking about earlier. You need to have the seed money to first win clients, and I think that is probably one of the challenges which Fincity alone can't, of course, change, but that is a prerequisite in expanding the market. But why do foreign fund managers, excuse me, set up in Tokyo? Of course, it is to win mandates. The Japanese asset management industry, it's surprisingly small considering the volume of asset that is in the market. It's a very a small market, so there's a lot of business to be had by asset management firms. But it's not just that. I'm also discovering from my conversation with foreign asset managers interest in investing in Japanese equities, Japanese assets. So it's not just about winning mandates, but also having asset management capabilities in Japan. And I think when before Fincity was set up, I think at the time of JAM, we did a survey on what's stopping you to come to Japan. And it is exactly these taxation issues and taxation visa, for example, can accompanying spouse work. The restriction that used to persist, that's been relaxed. So we are precisely targeting those pain points, which were identified initially as barriers. So hopefully this should, yes, put us in a stronger position.
Lee Hock, obviously there's a lot of asset management expertise in Hong Kong, but what about China? How do you view the level of expertise in China? Do they have legions of superbly skilled asset managers? And sorry, just one more point quickly from your point of view is, how attractive are these incentives that Tokyo is offering, do you think, to make Hong Kong asset managers turn tail and come and live in Tokyo instead?
All right, on the first point, we have to understand that the Chinese asset management industry is still a relatively new one, okay? We are only looking at a history of, 20-25 years, maybe, tops. And many of the asset management firms in China, the people actually came from the sell side. There was no history of a buy side in China, right? So this is something that we have to bear in mind. But in the last 20 years, the learning curve has been very steep for many of these domestic asset management firms, Chinese mutual funds. And the amount of transfer of technology has also been very steep. So there's been a lot of learning for many, many Chinese asset managers. And the point is, I think given, as I mentioned in my opening remarks, there's definitely going to be a lot more activity in China. And as Jesper mentioned just now, also in his remarks, Shanghai will definitely be the asset management hub for China. And that is the way forward. You know, there's no, I don't think, and I don't think that process will be reversed anytime soon. In fact, on the contrary, like Jesper mentioned, they are moving very fast, and we have seen the changes in the reforms in the last 18-24 months. And to your second question, Anthony, on the attractiveness of Tokyo. At the end of the day, like Jesper mentioned, what are foreign managers looking to do in Japan? And that's to raise AUM at the end of the day. That is the most critical point. And to me, I have not seen a huge exodus of managers from Hong Kong to Tokyo, even in spite of what has happened in the last 12 months here in Hong Kong in terms of the NSL. Yep, I have not seen, and people are saying this outflow of funds to Singapore. I've also not seen that, you know, a huge outflow of funds to Singapore. That is not happening. Historically, Singapore has been more of a private banking wealth management center rather than an institutional asset management hub. What I want to say also, Anthony, is that if you look at the manufacturing capabilities of global managers, they have used Hong Kong and Singapore to manage Asian bonds, Asian equities, and more recently as offshore RMB hub to manage offshore Chinese bonds. So the thing is, can Tokyo develop its capability in a new or newer asset class, such as infrastructure bonds? And that is something that I think will be one of the main drivers of growth for the asset management industry in the next 5, 10, 15, 20 years. Infrastructure bonds today is not a feature in retail portfolios. It's only an institutional play right now. But I see that as an opportunity for Tokyo to develop its expertise and to export that expertise from outside of Japan to the rest of China. And another thing I also want to mention, Anthony, forgive me, this is not, I'm just giving you my comments on how I look at it from the Hong Kong perspective. I think that there should be more Japanese homegrown boutique managers rather than subsidiaries of banks, securities firms. To develop Tokyo as an asset management hub, you need to have more homegrown talent, homegrown Japanese boutique firms. That is something that, I would like to see, in the next 5, 10, 20 years.
Very interesting point, especially on infrastructure, to which I have a particular bias. Jesper, you want to make a quick comment?
No, just a very quick comment, because look, there are some great success stories, right? And it's funny because in these committees, you always end up having to talk about half an hour for the lack of international schooling. But there's no lack of international schooling, right? I mean, look at a success story. The REIT market in Japan was deregulated, and as a result of that, it was basically corporations. It was made easier for them to spin off some of their real estate holdings to clean up their balance sheet, right? And as a result of that, you're now in a world where of the large ticket, real estate transactions, 1 out of 2 is done by a foreign REIT manager. Right. And that's with all the existing tax rules that are in place. So again, just to make my point, if I'm an asset manager, right, what I need is liquidity. What I need is AUM. I need access to deals. And, that all these, secondary and tertiary issues that we talk about. Oh, Tokyo has clean air. Yeah, I know that, but this is irrelevant. You're a business person, and these people are hard-nosed, right? They fight for every basis points, right? So there is success stories here, that can actually work very well.
Okay, thank you. Good points. Do we have any questions from the floor? Yes, gentlemen. Well, can you come to the microphone and identify yourself, please? If you can phrase your comment in the form of a question, so much better.
Sure. John Alkire, I've been a professional investor in Japan since 1979, 30 years at Morgan Stanley, 20 of which President and Chief Investment Officer. My company was one of the first to get a mandate from GPIF in 95, along with Goldman Sachs and IBJ. So I have some credentials to speak about the asset management industry. Currently, I'm employed by Dimensional Fund Advisors, whom you may know is a very academically oriented fund management company. We happen to manage Japanese equities for GPIF. So those are my credentials for these comments. It's not the issue so much of lack of access, but Japan has an oligopoly of very large institutions, starting with GPIF, which is the world's largest pension fund, Japan Post, which is the world's largest deposit-taking institution. These institutions do not give mandates to smaller boutique firms. You have to have a certain number of people, you have to have a certain number of credentials. Obviously, track record is important, but if you're a small company in Japan, an asset management company, a startup, and you have a very good track record, you do not have the capacity to handle the type of money that GPIF will entrust you with. So the way to make this work is, for example, look at the Sweden model, where you have AP1, AP2, AP3, where you have these ginormous assets that have been broken down into specialist type of managers within the overall scheme of the AP system. So they compete with each other. So for example, GPIF with the enormous assets may have 10 different sleeves, if you will, that specialize in certain type of mandates: public markets, non-public markets, startups. Same thing for Japan Post. Same thing for Chichosong, public teachers. There are 5 or 6 very, very large institutions in Japan, some of the largest in the world, public pension funds, that are huge and do not have the capacity nor the wherewithal to give a mandate to a small boutique firm. So you can talk in circles about opening the markets, making it easier. We can Google in English how to get a license in Japan. I've gotten multiple licenses, including the Tokyo Stock Exchange license in '86 that Jesper was responsible back at Morgan Stanley. But when you have very, very large oligopoly institutions that are afraid to make a decision to give a small manager with a track record, you got to break them up. That's the only solution. And that will attract a lot of people to come to Japan, because this is by far the best infrastructure. And my office is cheaper than Singapore, and it's right next door, as a matter of fact. So I'm not speaking about, being out in the boonies. So anyway, that was a monologue. I appreciate your patience, but that is the only way that you're going to attract a lot of asset management capability in Japan.
Can I just ask you a question? I make sure I fully understand that. When you say break them up, you mean break them up into divisions or into separate entities?
Yeah, the best model is the AP system in Sweden, and you guys can look it up afterwards. But it used to be a very large organization. It's too big to be under one umbrella. So they broke it up into specialist sleeves within the umbrella, for example, of GPIF. You would have a special division in private markets, public markets, infrastructure, startups. And these divisions within GPIF would compete with one another. Now, Japan Post tried that. Some of you may be familiar, but several years ago, before Japan Post went public, they hired the golden team from Goldman Sachs. Sago-san, who went later on to SoftBank, he was the chief investment officer, is a superstar by any measure. And the team that he brought in from Goldman Sachs, from JP Morgan and others, superstar team at Japan Post. None of them are left. They all left because of the bureaucracy, and they couldn't do what they wanted. So if the government is really serious, as you say they are, they've got to look at these ginormous 5 or 6 institutions in Japan, including Japan Post, and give them the ability to be much more, if you will, sleeves in terms of management. And that will change the market. You'll have everybody wanting to live in Japan from the rest of Asia, because it's such a great place to live. I've been here 100 years. My family's been. So anyway, monologue. Thanks.
Okay. Thanks for some very interesting observations. Do you want to make any comment on that, Naomi-san, or do you just want to take note of it?
Thanks very much for flagging that. And in fact, yes, when I was working for the UK Embassy, I was looking at GPIF reform. How has that been changed? And I think that model was one that was being kind of bounced around, but sadly was not taken forward. But it does sound like a very versatile step to really to unlock the AEMs.
Jesper, did you want to add anything quickly? Okay, Lee Hock, any comments on this, on the leviathans in Japan, if you like?
The development of the boutique industry in Japan is very important. Domestic, I'm talking about domestic boutique managers. And like what the previous commentator mentioned, I think that would be, the way forward, like what Singapore has done in terms of seeding some domestic firms as well. Just like Malaysia in Islamic finance, Bank Negara, central bank, has been issuing Islamic mandates to Islamic managers in Malaysia. So I don't see why this cannot be replicated in the case of Japan.
Okay, right. Do we have any more questions? Kurt, go ahead.
My name is Kurt Sieber. I'm an associate member here. To use Jesper's talk, I'm stuck here in Japan for 60 years, and I liked every time of it, and I like it today. That's why I'm still here. But what I want to say is first the list about the proposals to make to the Japanese total government as a whole, central government as a whole, I think is the most important part in this whole problem area which we still have. And it's not a great astonishment that your list and my list is almost identical. Not quite, there are some differences. But still, I'm in full agreement about Governor Koike. I remember about 4 years ago, there was a big article in the newspaper about the bizarre, you know what is coming, was it about? It was about the inheritance taxes, the bizarre, bizarre she called them. And I must congratulate whoever was in charge of what was going on in between, that this has now been changed to some extent, is a great success, and congratulations on it. Thank you so much. Well, I mean, everything which can be said it has really been said, but one point, if I can make it, is that Singapore is going to be a very important competitor of Tokyo. I mean, Tokyo is the #1 city in the world, and I'm not going to discuss that with anybody else. But Tokyo has the disadvantage of having a Japanese central government, and there's a lot of work to be done. Just as a last point, I happen to be an IMD graduate, and IMD is every year is issuing the world economy. And what is really very sad for me is that on that list for 2020, Singapore is #1. And guess where is Japan? It's number 34. That's where Japan has to work on many, many things. And I hope you will make a great contribution to the future. Thank you.
Thank you. Quick comment, Jesper, on Singapore is going to be a very strong rival for Tokyo.
No, but look, I mean, Singapore lives and dies with finance. That's their core industry. That's like telling Germany and Japan that you're doing cars, right? I mean, you do everything to defend the car industry. In Singapore, we do everything to be at the cutting edge there, right? And I mean, the point that was made about the VCC structure, right? I mean, we're talking about, if you're talking about a financial center, domiciling a fund in Japan, I mean, wow, you need a major restoration, right? You need a change in the entire legal structure of Japan, right? To actually make that viable, right? So that's not the point, right? I mean, Japan is, as I mentioned, it's not your fault, it's not my fault. It happens to be the world's largest creditor country. So this is about, managing, the assets, not about necessarily, putting structures into place that are managed onshore here in Japan.
Okay. Lee Hock, quick comment, Singapore, Tokyo.
Yeah, definitely. I think that Singapore will have to maintain its, competitive edge and will continue to do so in the years to come. Not just in ASEAN, before 97, there was a very clear distinction between Hong Kong and Singapore in the sense that Hong Kong was looking towards Northeast Asia and Singapore was looking towards ASEAN. But after 1997, after the financial crisis, there was a distinction of that the lines between ASEAN and Northeast Asia were not as so clear-cut. Today, I see Singapore will also be the offshore rupee hub, just as Hong Kong is the offshore renminbi hub. Singapore, I think in years to come, will develop an offshore rupee center in Singapore to tap the Indian subcontinent. I mean, we are saying this will not happen. Obviously, I'm talking about 10, 20 years from now. I see that as a huge, opportunity for Singapore. And this is how I look at it.
Okay, thank you very much. Just before we leave asset management, I mean, supposing that both Japan and China do develop much more competent financial sectors, fund management, for instance, how is that going to benefit the countries? What change will it make? Will it mean that there'll be much greater, more efficient use of funds in terms of investment into industry, for instance? I mean, so, in a nutshell, what are the benefits quickly for Japan and for China of having this much more efficient, hopefully, fund management sector? Just first.
Well, with a little luck, you'll facilitate, a startup nation, right? That your allocation of capital, rather than supporting inefficient, operators, that you punish the inefficient and that you, you reward the ones who have innovative and bright and pro-growth ideas, right?
Yeah. I think, yes, I very much agree with what Jesper was saying right now, but I think in Japan we've always spoken the need for changing the industrial structure from the manufacturing then to service to, so, that but the employment market has been very rigid and that hasn't happened, but hopefully with the allocation of funds, of finance, that should help facilitate, change the equation in bringing about this the change.
Sorry, just before you, Lee Hock, you comment on that?
Can you repeat the question? I missed.
Well, okay, very quickly. I mean, let's focus on China for you. If China does develop this, I mean, given that it's a very centralized financial system anyway in China, if China does develop this much more stronger asset management capability, how is that going to benefit China principally in terms of more efficient investment and so on?
You mean in terms of enhancing returns for domestic?
Well, enhancing just generally a benefit to the country, to the Chinese as a nation.
No, I think if you look at the whole asset management industry, Anthony, I think, can I just step back and look at it from the perspective of the whole process of the digitization?
Okay,
right?
Briefly, please. Yeah.
Yeah, briefly, because I think from that perspective, I think Japan has a lot to offer, in terms of digitization, because of I mean, you may laugh at me to say that, because the expertise in AI, there is some inherent expertise, right? In terms of the AI capabilities in Japan. Is there any way that Japan can use that to enhance its position within the asset management industry? That's what my point is, And another point I wanted to dwell before I go back into China, looking at the ETF market in Asia Pacific, Japan is the largest ETF market in the Asia Pacific region. how is Japan leveraging its expertise in ETF? As you know, the world of passive investing is now growing tremendously, right? And the reason why the ETF industry in Japan is so large is because of what the BOJ has been doing, right? In the last 5-10 years. What is Japan doing to enhance its position as an ETF center in Asia? Yeah.
Sorry, I don't have an answer to that.
The answer is nothing.
Right.
As an ETF provider.
Right. So, but back to your point about China, I think obviously there's going to be huge, at the end of the day, the choice of investments, the choice of products, the choice of the scale of the industry, ultimately will be, humongous.
Interesting.
In the case of China.
Okay, sorry, you want to make a quick comment? Yes, microphone, please.
The importance of the asset management industry in Japan is very simple and yet very profound. The aging of the population. Jinsei hyakunen, people are going to live to 100. If you don't have a robust asset management industry where people can get higher returns than 7 basis points on the 10-year, these people who have saved all their lives, the largest, Jesper can talk hours about this, the largest transfer of wealth in the universe is going to happen in the next 10 years. That has to be utilized in a proper way. And in order to do that, you have to have a very robust and well-functioning asset management industry where people have a choice. I would submit that the Japanese are very good at making choices. Go to Yayasu bookstore. How many magazines are there on bass fishing? If you're interested in bass fishing, you can learn all about it. So what I'm saying, the metaphor here is the Japanese public, the app's consumer is very, very intelligent, but has been given a choice. So by having a robust asset management industry, this gives those folks who are going to live to 100 multiple choices. And they have the ability, the consumer is very smart to make the right choices. So you can go on.
No, and this, I mean, again, what is Japan's asset? It's not clean air. The Japan's largest asset is its stock of savings. And it is record underutilized. And if all we're going to do is wait for it to be absorbed by inheritance tax, to pay back the national debt, I mean, that's a strategy for super stagnation and not a strategy for prosperity.
Okay. Just very briefly, because we're coming towards the end, unfortunately, but we focus very much on asset management, fund management, but what about the other aspects of being a financial center? I mean, offshore banking, stocks, flotations, trading in stocks. Are these areas in which Japan can hope to gain significant extra revenue advantage by virtue of its opening up? Anything you want to say on that?
Sure. I think there's sometimes a misconception that, Fincity Tokyo just cares about the asset management industry. It's not. It's exactly the point John Jesper has been making about asset management being key to solving a lot of the societal problems that we have. So it's not the asset management industry, but the function itself. And you have, if you have the buy side, then of course you need the sell side industry too. So there is, I suppose, not just in the asset management silo, but a spillover effect on the need of having such businesses in other sectors of financial services to be present in Tokyo as well.
Okay, thank you. Quick comment or not?
I just think it's a fundamentally bad business because it's super commoditized, right? I mean, why would you want to go into trading? Because, you basically don't make any money anymore. So I think that the point that was made by, by our friend from Hong Kong, fine, green bonds, it's something that Governor Koike is very keen on. It's a niche asset class. It's something where, yes, the initial liquidity pool, can certainly be created here in Japan. Sooner or later, it's going to be copied, by somebody else. And that's the nature of the game, right? But I think that, infrastructure bonds were mentioned. I think that's an additional, aspect where, if there's wherewithal, of Tokyo to do this, right? And that's something where, even the monster of the GPIF and Japan Post would be very happy to engage in size, right? If you've got, an Asian or a global infrastructure bond, and the Japanese certainly could spearhead that market because they've got the large underwriters, who would go for that spread product, right?
Yeah. Lee Hock, very quickly, closing comment. I thought your point about infrastructure bonds was very interesting. I mean, I remember one of the previous presidents of the ADB came here some years ago, and he said, it's absurd. Here are all of my fellow Japanese, they have so much money, and they're not investing it in things like in Asia, in infrastructure bonds. He mentioned that at the time.
Yeah, so that's something that I think will be a part of a pension fund portfolios allocation as a mainstream asset class in the next 10, 20, 30 years down the road. As I mentioned just now also in my remarks, there are still a dearth of retail offerings in this space, whether it's green bonds or infrastructure bonds. So that is something that we have to develop. And I think, as I mentioned just now, Japan has the expertise and capacity to develop this.
Okay.
Yeah.
Well, unfortunately, we are at the end of our time, I'm afraid. Normally, we have 2 of these events on a theme each month, but unfortunately, we're going to be running into Golden Week later in this month, so we won't have a second event on this particular theme at the moment. But I think it's, Tokyo's role as a financial center and financial centers generally is very interesting. So we'll aim to come back to it on a future occasion. And very quickly, next month, we'll deep dive, we're looking at something very different, the impact of COVID-19 on the mental health of Japan. It's a huge problem, but I won't try to anticipate that, but I'll just flag it for you. So thank you very much for coming along, and thank you to our panelists.
Thank you.
Much and to you too, Lee Hock. And thank you everyone here, and that closes the session. Thank you very much.